Have you noticed the recent recovery in Bitcoin's value and wondered what's driving it? This is a question that has been on the minds of many, as the price of Bitcoin has seen a remarkable rise from its 2-year or so lows, starting in October 2023 to the present day. This price increase has not been a random occurrence, and it is sure not driven by fundamental factors only, even though this video may seem to suggest that. There are in fact several key factors at play here, each contributing in its own unique way to this upward price move. The recent one mostly comes down though to an increased interest by institutional investors, accumulating coins ahead of an expected SEC approval of BlackRock's Bitcoin ETF, meaning that particular player would have to accumulate significant amounts of Bitcoin to cover that ETF under its own terms, adding to the scarcity of Bitcoin that is inherent from Bitcoin's protocol anyway. On a broader fundamental note, Bitcoin's added role as a hedge against global economic uncertainties plays a part as well. These are all pieces of the puzzle. But again, even though this sounds like we're doing fundamental analysis here, technical factors come in at the same time, and that's what really drives the price right now. As we peel back the layers, a clearer picture begins to form, revealing the very simple facts of supply and demand, rather than any complex, let alone mysterious dynamics that are driving Bitcoin's value day to day. In current months, this has been upward. Understanding these factors is crucial for anyone involved in the cryptocurrency market, but it really only comes back to understanding supply and demand, something I've been familiar with since I took Economics 101 at SUNY in Stony Brook, New York. So whether you're a seasoned investor or a curious onlooker, just try to get rid of the background noise and focus on the real drivers of the market, if you want to understand it, and be successful in the process. Below, we'll list some of what the masses consider key catalysts behind this remarkable price ascent, just so you know what fundamental sentiment is also influencing the price of Bitcoin at this particular point in time. Mainstream holds that one major player in this surge is the increased interest from institutional investors. Now, when we talk about institutional investors, we're referring to the big players in the financial world. These are your established banks, investment firms, and other financial institutions. While it may be that institutionals are currently one of the driving forces, let us not forget that Bitcoin is the precise opposite of that. Bitcoin is the people's money. As such, it doesn't give a damn about Wall Street or what institutionals think. Exceptionally though, over the past few months, these entities having shown a heightened interest in Bitcoin in addition to normal market-making factors, have been behind much of the upward price pressure. But why is that? Well, it's all about credibility. When these financial heavyweights start accumulating Bitcoin, it sends a clear message. Bitcoin is a viable asset class. It's not just a passing trend or a speculative bubble, it's something that's here to stay. This in turn has boosted Bitcoin's credibility in the eyes of the wider investment community. But it's not just about credibility. The involvement of institutional investors also signals a shift in perception of Bitcoin's long-term potential. Remember, these institutions are not in the game for quick profits. They're looking at the long haul. They're investing in Bitcoin because they see it as a valuable addition to their portfolios, one that can offer significant returns over time. This shift in perception has been instrumental in driving up the value of Bitcoin. As more and more institutions embrace Bitcoin, it creates a ripple effect. Other investors, both big and small, start to take notice. They see the confidence these institutions have in Bitcoin, and it encourages them to get involved as well. This increased demand, coupled with Bitcoin's limited supply, pushes up the value. And let's not forget the role of the media in all this. The media coverage of institutional involvement in Bitcoin has been extensive, to say the least. Every time a new institution announces its entry into the Bitcoin market, it makes headlines. This, in turn, generates even more interest in Bitcoin, fueling its upward trajectory. Institutional accumulation is a major pillar supporting Bitcoin's soaring trajectory. It's a powerful force that has the potential to drive Bitcoin's value even higher in the future. As we continue to decode Bitcoin's soaring trajectory, understanding the role of institutional investors is indispensable. Another key driver of Bitcoin's value surge is its inherent scarcity. Let's dive a little deeper into this concept. Bitcoin, unlike traditional currencies, has a maximum supply cap. That cap is set at a total of 21 million coins. This cap is not arbitrary. It's an integral part of Bitcoin's design, and it's one of the reasons why the cryptocurrency has such potential for value. Now you might be wondering what happens when all these 21 million bitcoins have been mined? Well, we're not there yet, but we're getting closer. As of today, over 18 million bitcoins have been mined. That leaves less than 3 million still to be unearthed. But here's the twist. The rate at which new bitcoins are created is not constant. It's governed by something known as halving events. Every 4 years or so, the reward for mining new bitcoins is cut in half. This halving effect slows down the rate of new bitcoin creation, making the remaining coins even more scarce over time. This is where the scarcity factor really kicks in. As the rate of new bitcoin creation decreases, the demand for the existing ones can potentially increase. This is especially true if more people and institutions continue to adopt Bitcoin, either for its potential as a store of value or as a means of transaction. This scarcity factor has been particularly pronounced in the period from October 2023 to the present. With fewer new Bitcoins entering the market, and with increasing demand from individuals and institutions alike, the price of Bitcoin has been pushed upwards. So you see, Bitcoin's scarcity isn't just a theoretical concept, it's a very real factor that has been fueling the recent price surge. And as we move closer to the maximum supply cap, this scarcity factor could become even more significant. The limited supply dynamics of Bitcoin are a vital element in its price appreciation. In the face of global economic uncertainties, Bitcoin has emerged as a sought-after hedge. The world economy is a complex and volatile entity, often leaving investors scrambling for safe havens during times of uncertainty. Enter Bitcoin. With its decentralized nature and finite supply, it's become a beacon for those looking to diversify their holdings and shield their wealth. Inflation, the silent thief that erodes the purchasing power of traditional currencies, is a persistent worry for investors. But Bitcoin, unbound by the whims of any central authority, offers an alternative. Its deflationary design makes it a potential bulwark against the erosive effects of inflation. Meanwhile, fears of currency devaluation, especially in economies with shaky foundations, have led investors to seek refuge in Bitcoin. Its borderless, peer-to-peer nature allows it to hold its value even when traditional currencies falter. The role of Bitcoin as a potential safeguard against traditional economic risks has been a significant driver of its recent price increase. So, let's summarize what's been causing this remarkable surge in Bitcoin's value. First up, we have institutional accumulation. The involvement of heavy-hitting financial institutions has added a hefty dose of credibility to Bitcoin, signaling a shift in its long-term investment potential. Next, we have the dynamics of limited supply. Bitcoin's inherent scarcity, with a capped supply of 21 million coins and periodic halving events, has been a significant contributor to its price rise. Last but not least, we've seen global macroeconomic trends play a part. Amid economic uncertainties and fears of inflation, Bitcoin has emerged as an attractive hedge, a safe haven, if you will, for those seeking an alternative store of value. Understanding these fundamental drivers is essential for anyone interested in the dynamic world of cryptocurrency, especially during this specific period of Bitcoin's evolution.